Hello, everybody. It's Tortoise Investing coming at you today with a portfolio update. Now, we did make some moves. Before I dive into everything, if you're new, please hit that like and that subscribe button. Join the 387 that have already done so. Let's grow this channel and grow our portfolios together. I greatly appreciate it. It only takes a second, and it would mean the world to me. Let's keep growing this thing. But yeah, I sold Vici and American Tower. My reasoning behind it is I didn't want my portfolio to be 50% REITs. Not unless, I'm already retired. Then like if I'm already retired, I'd be okay with that because it's a really good way to have really high yield. But for the time being, I sold Vici because I didn't want it. I didn't want a REIT to be 30% of my portfolio because of my recent sell-off that I had to do to pay off all my credit cards. And I sold American Tower, again, just to kind of bring down my REIT percentage. I just didn't want to have 50% of my portfolio in REITs. But we added Msci, we added Tractor Supply, and we added General Dynamics Corporation. We added a financial, a consumer, which I really like, Tractor Supply, and a defense stock. So this is how everything looks right now. I'm going to continue every 2 weeks, putting anywhere from $200 to $300 into this, and keep growing this thing. My goal is by the end of next year to be at 10K, and I think I can do it. I think I can pass that, honestly. But yeah, here is the holdings. This is how everything looks. As you can see on screen in Microsoft, I'm up big on that. I wouldn't mind. I would like to add more, but I don't know if I'm going to be able to at that price point. Again, Dollar General, I'm a big believer in Dollar General. I know I'm down 4.8% on that position, but I am just going to add more to it. And my new ones, I get paid on Friday. So next Monday will be another portfolio update video. If things are the way that they are right now, I'm more than likely going to be adding to my positions of General Dynamic down to Dollar General just to try and get the share counts up on those. Now over here on the dividend, track your dividends, we're setting at an annual income of $55. This is another thing I'm going to start tracking going forward on my videos. And just that's the big thing. We want to build that up, and to hit fire, you want to have that as high as possible. The portfolio has a beta of 0.82. Considering I've got two behemoth growth stocks in here, I think that's pretty good. I consider Microsoft and MSCI definitely like high growth dividend stocks. Let's go ahead and take a look at them. So MSCI, it's got a free cash flow yield adjusted at 2.59%. It's got a dividend yield of 1.17% and a payout ratio of 44.2%. And now I say that these are big growers over the last 10 years, up 1,230%, well, 80% over the last 5 years, as you can see here. This thing was peaking around 650s. It's down to 470. I thought that was a really good entry point. I've liked MSCI for a while. It's got a revenue growth over the last 5 years of a rate of 12.03%, just up and to the right. It's the same thing with EBITDA. Free cash flow is another thing I love. Free cash flow increased at a rate of 23.54% over the last 5 years, and that correlates with the dividend, how much it's been increasing. You'll see that in just a second. EPS been increasing at a rate of 26.6%, 26.26% over the last 5 years. Yeah, they do have some debt, but the debt percentage is not increasing as quick as their revenue and their free cash flow is. I'm perfectly fine with that. They got $4.5 billion in debt. Their EBITDA is 1.33. Again, that falls under my line of. Actually, doesn't. It's right there at it, but it's such a growth heavy company. I'm breaking my own rule with this one. I really like it. The dividend growth over the last 5 years is almost 30%. With such a big grower like that, I'm okay if it has a little bit more debt. The share outstanding over the last 10 years have been decreasing at a rate of 4%. They have slowed down here recently with the share buybacks, but still, like, there are a lot of things ticking with this company that is just so strong. The return on capital employed is slowly going up. Share count's going down. Dividends increasing like crazy. Revenue, free cash flow, and EPS are increasing at a rate of 20+%. I just, I, I like it. There's so many things with this that are just ticking right for me. Next up is Tractor Supply. Now, it was a toss-up between this one and Home Depot for me. And the reason I went with Tractor Supply is they have lower debt. And I'll be honest, I know a lot more about Tractor Supply. We got chickens and stuff around here. We got some pet turtles and things. Um, we go to Tractor Supply. I know the company. And when it comes between this and a home improvement store, uh, I think I read a thing where 50% of Tractor Supply's sales come from like animal needs. And no matter what the economy does or what happens or if there's a recession, people are still going to need to feed their horses, their rabbits, their pigs, their chickens, like their farm animals. That's still going to have to happen. Where if you look at it, things are hard. I'm not going to be able to upgrade my windows or redo my kitchen this year. You can't wait to feed your animals. You got to still do that. So that's the reason I went with Tractor Supply. Lower debt, and I feel that it's more of a need overall. They have adjusted free cash flow yield. It's a little low, but that's okay at 1.86%. It's got a dividend yield of 1.9%. The payout ratio right there at 39%. Now, over the last 5 years, the revenue's been increasing at a rate of 14%, which is very nice. The EBITDA as well, right there in line. Their free cash flow over the last 5 years has been increasing at a rate of 8.9%. EPS, right there in line over the last 5 years, 24.19% increase. As I said, they have a little smidge of debt at 8.14, 814 million. Their EBITDA is 1.7 billion, so that debt is not an issue whatsoever. Over the last 5 years, been increasing their dividend at a rate of 27.14%. Absolutely bonkers. Their share count has been decreasing over the years, as you can see here, at a rate of 2.57% over the last 10 years. So pretty consistently buying back shares, which is another thing you like to see. And their return on capital employed is slowly but surely going up. So again, a lot of things ticking in the right direction that I really liked with Tractor Supply. The next one that I got might be a little bit of a surprise, but I really like this one as well. I like this one more than I did Lockheed Martin. General Dynamics. They got an adjusted free cash flow yield of 4.86%. They got a dividend yield 2.49%. Payout ratio 41.7%. A lot of good numbers. They're down pretty heavily here recently. I know they won a couple contracts here, so they should be getting a nice little bit of revenue and stuff flowing in. Over the last 5 years, revenue's been going up at a rate of 4.9%. Free cash flow yield's been going kind of sideways-ish. The EPS, but it is still very consistent. EPS been increasing at a rate of 4.4% over the last 5 years. They do have some debt at $7 billion, but the EBITDA is $5 billion. Not an issue whatsoever. It definitely falls right on the 3 range I like. I generally like companies to not have 3 times more debt than EBITDA. And the dividend, although slow but steady, increasing at a rate of around 7% over the last 5 years. This is more of my defensive play. This is more of it's still a grower. I like what I see in the company. It's still a market beater. And I got Microsoft, got Msci, and I needed something to kind of balance out a little bit. And I feel like General Dynamics does that. They've been doing share buybacks over the last 10 years, a rate of 2.23%. This has been pretty aggressive up to here lately. Return on capital employed above 10% very reliably. Hovering around right at 12% here in the last few years. But yeah, 3 really strong stocks in my eyes. I like what I see with them. I like what I see with the portfolio. So yeah, that's everything I got for you. If you're new, like I said, make sure you hit that like and that subscribe button. I'm going to be pumping out 2 dividend stocks you can buy and hold forever on Wednesday and Friday, so stay tuned for those. And until next time, see yous.